Welcome, everyone. Bert and I are going to talk today about analyzing your insights for SaaS e-commerce metrics. It's another version of how we work with VCs and private equity companies. We're going to look at the metrics around SaaS companies, of which, we've got a lot of clients and here in Silicon Valley of software companies. And what sort of KPIs can be found inside Google Analytics. So if you're doing due diligence on an investment or an acquisition, you can, reconcile these metrics to Google Analytics. Let's dive in. Some of our clients over many years, all sectors, all geos, some of them are fairly large SaaS companies. And what I found interesting recently is not only in venture capital, a lot of these unicorns have raised a lot of money and not going public. Companies like Stripe, etc., been around for almost 13, 14 years and still private. The same is happening in the private equity portfolio companies. In fact, now there's the medium holding period is 5.6 years. So there's a lot of private equity firms that are sitting on companies looking for liquidity. And again, if they're in active discussions for M&A, some of the insights we'll give you today will help. Just 26,000 active portfolio companies in buyout funds worth almost $3 trillion. And PE funds usually have a very strict time frame for returning capital to limited partners. And so, one of the things that you've got to do if there's so many of these companies sitting in funds is to grow organically and increase the EBITDA. And so, we see there'll be a lot more secondary market activity for private equity to increase that liquidity. And as a result, we can help VCs and PE funds look at that portfolio company in their analytics to improve revenue, CAC, and margin. So let's dive in. One of the things that MRR, ARR, these acronyms are really important. How do we find this? Inside Google Analytics, under the eCommerce tab, you can see three very important metrics, which is, the conversion rate of the transaction, meaning how many transactions occur per visitor, per click, all the way through the shopping cart. And what the average order value is. So, with Google Analytics, if you don't know, you can analyze by time, like the date range. You can analyze by segment. So, you can look at different segments in terms of the users that have clicked, those that have got through different parts of the shopping cart, and also just geographical region, right? Whether it's the US or Europe or individual countries. And also cities and states you can analyze, which is really important if you're looking at businesses with a retail store network, for instance, that have got a sway or have a density in certain cities or a geo region. This is actually a real bricks and mortar and e-commerce retailer, with several hundred stores, turning over, over $1 billion offline, several hundred million online. And so, a critical thing when you're looking at recurring revenue is just to break it down by channel. How much revenue is coming from paid search, from organic search, from direct, from email, from affiliate programs. And as you can see, if you run your eye down the revenue column on the far right of the screen, you'll see, on a time series basis, which channel is performing. And in this situation, email subscribers. And then you're really just running what's the cost of the click, what's the cost of the email, are you buying email, lists and or advertising in other people's emails. So you can determine really a sort of a cost per acquisition from, and also the revenue from individual channels. I like to look at, I call them cyclists, and they're those consumers that shop around with no loyalty. And so one of the things that we can do is break down revenue by coupon code. Are they, I think something like what, Bert, 50% of all affiliate driven sales in the United States is comes from coupon codes, right? Who doesn't just abandon the shopping cart and wait an hour for the coupon code to arrive with a 5% discount? So, again, if you're analyzing an e-commerce company and you're looking at the revenue, where's that revenue coming from? Is it coming from return visitors? Is it coming from, folks that are just one-timers cyclists with coupon codes, and they won't come back and they won't subscribe, for instance.
It also highlights if you're over reliant on generating it through those kind of discounts, and you're not getting, sort of your shelf product being sold, and everything's flowing through only through coupons and promotions. Then your margins are going to be really, really tight all the time.
Yeah, good point, Bert. Inside Google Analytics, you can break down the e-commerce reporting by product, and then you can actually filter by coupon, so you can see which products are being driven by coupon purchases and which aren't. So just that sort of very, very specific analysis. And then with churn rates is clearly in SaaS, churn is a major metric. Investors want to see a low churn, sticky product. How do we look at that? We can break down checkout behavior by returning and new visitors. And that's a really interesting stat, because you can see if it's a returning visitor that's getting stuck in the shopping cart or dropping off at the payment, that you've got a loyal customer that's getting to the end of the funnel and they're dropping out. Why is that? It might be price. It's not the proposition, it's not the product. It might be the price, the delivery terms, etc.
Or you might have a UI issue that's creating friction.
Exactly.
Because they're loyal enough, they came back, but they're still having trouble getting all the way through. There might be something there.
Yeah. So some really, really good stats here with looking at churn rates. And again, bounce rates, which is, bounce rates are basically, if I'm a user, I've come to that page and I've left within, 1 or 2 milliseconds. You can actually remove bots and internal IP addresses from within Google Analytics, so you can filter that out. But again, just looking at bounce rates by, visitors and returning visitors will give you an idea of, predictability of churn. And in this situation, you can see that bounce rates, actually are lower for returning visitors, which is a good sign, right? If new visitors are coming to the site and bouncing, you're probably overspending, on your acquisition, and if you're projecting out, marketing costs, if you're investing in a company, that's a material point, right, Bert?
Yeah, and the good thing is also in GA4, the newest iteration of GA, they've given you sort of flipped the head on it and given you engagement rate, which isn't just another way of looking in the inverse. So you'll be able to also identify engagement rate and how well that is, and look at that metric.
Good point. And again, on that, just you can see the CPC, the cost per click, inside Google Analytics. So if you want to just quickly calculate CAC and just see over time, Google's pretty good at making money, as Bing and the other online media channels are, and therefore you've got to look at what the CPC is. So if you're doing 1, 2, 3 year forecasts, you want to, on the CAC side, factor in that CAC's not going to be flat or go down, it's probably going to go up because the search
Right.
engines, social media, Facebook, etc., are going to just charge more because the public companies and want to make money. And so, and again, it's not just CAC. Holistically, it's by device, right? Understanding if mobile is more expensive than desktop, what percentage of users come from desktop and mobile. I think it's fair to say, so many of our clients, we see mobile over 65%, and is mobile going to be, a higher CAC, and is that going to drive more, particularly on a trial side, right? Like people are mobile, they're willing to test something out, and, device desktop is more, I call it the lean back experience, right? Where you're not sort of just, flicking through on your mobile phone. You're actually sitting there deep in a work sense, in work mode. This is an interesting one when we're looking at CAC, and it's just all about, again, analyzing returning visitors and new visitors by the traffic type. And you can see here on the right side in the green box, new visitors this is the time series. They're down 16, almost 17%. So it's really interesting just to run some time series analysis by returning and new visitors by traffic type, just to really see am I continuing to pay for returning visitors and over time, or am I happy just to organically get new visitors? And so, you'll see up there, number one is, 25% of new visitors come from organic. That's a healthy sign, right? If it was 50% of new visitors coming from paid search, it means a very competitive market, got to pay for traffic. What's the return of those people, et cetera, et cetera. So you can start to model out, some of these important metrics.
Well, it'll also give you an indication that maybe you need to do something to make your site more, if it's a low rate, to get your site more SEO optimized and build out the site, maybe add more content to get a higher percent of new visitors coming through organic means. If you're relying too much on paid, then that's going to be costly, and it's showing that you might not have a strong SEO strategy in place.
If you're a retail network with stores, Google does provide some analytics looking at, they actually use the IP address of a user to detect when they've been on your website on their mobile phone or their desktop, and then when you enter the retail store, or at least around that store, they infer that you've visited the store, so they can come up with this metric, which is incredibly insightful. And in this situation, you can see, in the full year of 2022, January 1 to, or actually the 6 months or 7 months, July 31, that 51% of store visits came from people that had organically searched and found that listing of that retail store on the web. And so, again, it's another way of saying, am I paying, what percentage of visitors to my store am I paying for via paid search? What percentage are coming through organic search, direct search, and other channels?
Yeah, and this is a great metric, especially if you have a retail business and you're trying to link up your online efforts to the retail side, really trying to see what the correlations are and how well it's working. And I think this is a great metric that a lot of people don't know about. And as you see here, it's a beta feature, but certainly it provide a lot of value to private equity firms that have retail holdings that have obviously a lot of brick and mortar stores under them, and trying to assess how well the online portion is feeding in and helping the brick and mortar side.
Yeah, absolutely. And this is the default channel listing. You can actually sort this by source and medium, meaning which search engine, which is incredibly insightful. So effectively, you can see you know by store, by search engine, how much paid is going to each store, which is gives you
Exactly.
that store visit rate. And you can just map out what the average order value is, how many stores, how many visitors per store lead to a sale. So you can really
Hmm.
run some pretty good analysis here. And on that point, it really just helps you when you're thinking through investing in an omni-channel, retailer with an online, a bricks and clicks type
Hmm.
operation, and looking at the transfer of people online to offline, and running some analysis there. And so again, you can see what store visit rate by channel, right?
Right.
And actually in this situation, you can see 11.25% of store visits, which is higher than the average, came from referral, and as opposed to, direct, which is 8.22%. Well, if I jump on the internet in my browser, type in, bestbuy.com, and then I go to the store on the weekend, like 3 days later, well, clearly, I was looking for something and I go to the store to find it. And so it's
Mhm.
not necessarily got a high store visit rate. But, organic search at 10.52%, people are browsing for a range of different things. And then they're like, oh, Best Buy's got it. And then I'll go in there. But, again, you didn't have to pay for that store visit. It was an organic, it was free. Um,
Right. And then that kind of insight, whether or not that sort of linkage is really something relatively new, and hence why this is a really interesting metric that Google is starting to provide in GA.
um, And, when we think about lifetime customer value, Google has a attempt at calculating this. It's not really, it's basically just done off a 12-week time. And they're really looking at what sort of the revenue per user is. Um, and,
Right.
and you can calculate lifetime customer value on page views, sessions, and transactions. But it's worthy of a conversation, but it's not really about, lifetime value. I mean, obviously this
Yeah, it's
data.
not LTV in the traditional sense, but it's still a good metric to look at. Again, another beta feature here, but breaking it down by sessions or transactions per user, et cetera. It's pretty interesting, and
Yeah,
it could be some interesting insights here.
absolutely. Um, particularly when we look across e-commerce websites, they might have 5 or 6 pages per visitor, and that visitor spends X amount. So you can basically start to say, well, if I'm looking at an industry, let's call it, I don't know, um, um, you know, sportswear or cosmetics, you can say, well, what are the comparable metrics from other competitors? So it gives you a
Hmm.
sense of customer value, which is interesting. And again, you can use this for predictive modeling as well, at a revenue level based on channel. So am I actually getting more revenue per user from those folks that come through paid search versus organic? And you'll see line 6 there, affiliates, has got a $27 per
Yep.
user revenue.
Hmm.
And maybe I need to increase my affiliate net.
Exactly. Well, that's what that would tell me is where should I be putting my dollars? And if I see affiliates, the revenue per affiliate line as it is there, it's telling me, oh, well, definitely need to try to put more effort into my affiliate marketing because I'm getting more bang for my buck there. It's on order of 3 times or more, 4 times some of my other efforts. It's definitely it's obviously maybe you're not going to shift 100% over, but it definitely calls out to, hey, we should be focusing more attention here because when we do it, and we do it well, it generates more revenue per
Right.
user or per
Yeah,
customer.
and as we know, affiliate marketing is performance based. The merchant
Yeah, there's
only
no
pay,
risk. You're putting out. Yeah, there's no real risk out there outside of just paying the commission on the transaction. So it's great.
right.
Whereas paid search, it's like a media buy, right? You're putting money out there, and then you're hoping that you recoup it down the road.
Absolutely. Um, so some interesting ways to think about, SaaS and e-commerce metrics. If we can provide some more information, please let us know. Thanks very much.